Hello and welcome to Landy's Crypto Corner. Today is January 1st, 2025. Happy New Year to everyone. We're taking a look at Bitcoin and we are going to follow up with where we left off on the Macro Monday video. We're going to, of course, look at some shorter term timeframes, and we will take a quick look at the longer term timeframes like the quarterly and the monthly to kind of see where things are. And on Friday, I will follow up in more detail on what I am looking for in the longer term and the shorter term timeframes. And specifically in this next weekly closure here coming in on Sunday. So taking a look at Bitcoin here on the daily, we can see that, Bitcoin is taking a little bit of a rest. It's kind of lurching sideways and down now, still within this, range low side structure here from the highs and the uptrend in a daily downtrend now. So, as long as Bitcoin can hold this zone kind of between, essentially $90,000 and $92,000, then I'd be looking for, a little bit further of a bounce up, possibly to try and take out $100,000 up there. Otherwise, we're looking at this structure over here as, kind of shit or get off the pot for the bulls. Because if this structure over here specifically at $85,000 fails, then we're looking for this larger accumulation to get retested, and looking for it to essentially turn into a bullish retest from there, at least at first, and then come back and evaluate if it even gets there, right? So that's the big one. We did get a little bit of sideways and up price action after breaking out into this big expansive structure up here. And, not much has changed since, essentially since we've been tagging the lows around $90,000 to $92,000. So let's go ahead and turn on the local structure that I've been kind of referencing lately. This, of course, has the bear market fib pull, $69,000 to that 15.5 here on spot price. And we have the different extensions. And then, of course, we have our local kind of support and resistance areas for this current structure that Bitcoin is building. And, we expected a bounce off of this area. We got it in the lower term timeframes. That has turned into a bit of a daily bounce. And this, from, the current high side structure, bounced all the way up 5.34% and currently trading about 3.71% off the actual low. This low is technically set, but it's nothing that I'm really excited about, because now Bitcoin needs to take out this high to get any kind of progress to the upside here, and that's 96,150. Then I'd be looking for Bitcoin to test up basically $96,000 to $98,000. We see that the basis band is kind of splitting the difference there at 97.5, and more towards that $98,000 biased area. But above there, then we have to see Bitcoin take out the lower high over here on a swing and a close, and that's coming in at just shy of $100,000. So essentially, if we see Bitcoin closing back above $100,000, if it hasn't already tested up further to like 102, into this green zone at 101, 174, 175 area to 102, then I would be looking for it to do so. Possibly, of course, back above the upper first standard deviation and back inside of the green zone. It's an area between that 101, 175 to that 104, right around this 1272 Fibonacci level. So that's essentially what I'd be looking for as like a target area on any breaks above. And I do mean on closes. Now, if we do get a higher high swing with no close above it, well, that's probably just a deviation of this downtrend, and we're probably looking for things to play back to the lows, or at least try to find some sort of a higher low structure. But in that case, closes above $100,000 is what we need to see. Progress above that 96,150, and we're looking around 96 to 98, then 98 to that $100,000 lower high. And if Bitcoin does fall below, the lower first, in terms of volatility, we can look back to the close opens here at 92.5 to 92.6, but realistically, the support level is what Bitcoin dipped into. Now, you got to note that this area was prior resistance. Yes, there is a wick above coming in right in line with that lower first standard deviation and at 93.5. And while that is, relevant to look at, the more pertinent area to be looking at is this resistance that did get flipped into support as especially on a close open basis. And, we did get a front run there on the 5th. We saw another front run of that support structure on the 20th. This is considered a front run over here on the 23rd. And then, of course, we finally dipped in there on the 30th. And, pulling away from there is not abnormal. This is where we expected to see some bids come in anyway. And if Bitcoin does come into this area again, start trading back towards $92,000, if we do see that that low dropped at 91,271, then, I'm looking basically to the bottom side of the range by the lower second. I do expect if Bitcoin's going to push back down, we will see the lower second start to stretch towards this 1.168, not 618, 168. 618's way up there. But either way, this is 16.8% above the fib pole structure for the 69 to 15.5. But in this case, that's around 88,700. This also happens to be a swing low area of interest. We can see that even this closing low is essentially, within this zone. Drop the wick low at 91,271. Look to the close open here, right? That was an area that was flipped from resistance into support on a closing basis. Even a nice test down into the 88,700 level. That's going to be the area of interest. If we start to see Bitcoin closing below the lower second and then losing this low over here, then we're looking at Bitcoin testing, not just the upper $80,000 to $90,000 region. We're probably looking at it diving down and trying to test the mid to low 80s. And that's where $85,000 is where the bulls want to see closes come in above. Anywhere below there, that's a very aggressive expansion to the downside. Highly likely that we're looking at, the mid to low 80s and then the mid to upper $70,000 region from there if we were to initiate some real expansion to the downside. But you might remember I said that, this was a beautiful expansion to the upside. We did get a compression and we started to expand volatility and then came right back down and mean reverted back to our supports here. This is being reflected with our volatility metrics too. So I do think, it would be abnormal for this to get full-on expansion to the downside in the position that it's currently in. Maybe if it gets another lower high, we start to see the bands recompress, and then it gets expansion where this BBWP gets up over the moving average there. It's red when it's under the moving average, but this is lining up for another move at some point, but we have expanded bands. And when the bands are expanded, they kind of set up and kind of define the highs and the lows at the lower second area to lower third area and the upper second to upper third area or zone. And until I actually see like the BBWP get above the moving average and Bitcoin start to break down from support below the lower second, I'm not really looking for a very big expansive move. More likely what we're going to see is Bitcoin move back towards its basis band as the basis band comes down towards price. And that's where we already see this, right? Bitcoin's moving up towards the basis band. Basis band is headed down towards price right now. And of course, the basis band is a 20 simple moving average. So what we're looking for is expansion of price volatility again, but with expanded bands kind of set up in this kind of sideways and down range at the moment. It's kind of defining the area for me, in my opinion. I'd be looking to the lower second if it starts to really get expansion down there. Could it walk the bands down to further areas and then continue that? Sure. That's where, anywhere below $85,000 in a daily close, we have to pay very close attention to, is it a deviation or are we hunting lower prices for longer term, right? And I don't mean like long term like a bear market, but longer term relative to the daily. It's going to take a while to sort itself out back to the upside, change structure, all that kind of stuff, because this is a downtrend. So now it's just a matter of setting a low for the bulls and then breaking this downtrend, putting in a higher low, and then getting the hell out of this green zone back to the upside, because this is a lot of resistance through here, just above $100,000 at 101 to 104. So that is something to pay attention to. Let's go ahead and look at a few other things. So we got BBWP, talked about trend, basically support and resistance, and volatility, right? And the next big piece is going to be momentum, and that's going to be RSI and the Stoke that I use. Basically two views of momentum. We do have a nice cross over the moving average here. when this does set a low, it's going to get another drive of hidden bullish divergence off of this low and this low over here. That's good enough to pop it back up. I really want to see in-trend bullish divergence start building. So I want to see regular bullish divergence. And it can do that if it pops up and puts in a higher low relatively, relative to these other lows. I'll describe that when we do, if we do rather see it, not when, because it is a matter of if right now. And the scale midlines at 96,146, and go figure, 96,146 is very close to our 96,148 high here that I would like to see Bitcoin take out and set a low above on closes. So that would look pretty good. And that's the scale midline of RSI as it stands today. Bullish control zone, let's check on that, see where it is. It's at 103,405. Hey, go figure, that also is a pretty key area right near the top side of this green overhead resistance zone by the 1272, which is at 103,645. So fairly good confluence on that. Let's look at the bearish control zone just so we understand where that's coming in. Bearish control zone even is right below, it's essentially $90,000. So bearish control zone is essentially this low over here, if I'm not mistaken. Nope, it's not that one. It's this close open right here within the red zone of interest down here. And that works out well. This is also the closing low in which, if this is lost, we're not going to see any local hidden bull divs populate from either. So that's a pretty key area. So we need to see that hold up if Bitcoin does head down to that red zone. And yeah, so far so good on RSI. Nothing too crazy going on here. And again, if it does set a low, it's going to get another drive of hidden bullish divergence. If we look at momentum, we do have momentum turning up from the critical zone here of the regular stochastic momentum indicator. This is not a Stoch RSI. Stoch RSI measures the velocity or speed of RSI. And we just looked at RSI. We don't need another indicator to tell us anything about it other than what we saw with our eyes there. But what this is regular Stoch measures close over close price momentum. We do see an initial shift back to the upside here with the K over the D. That's the white over the purple for my particular indicator here. And we can see the momentum pivot to keep this turn back to the upside. You can think about it like pressure back to the upside, is at 92,700. I believe that Eric Crown explains it that way as well, which I think is a good way to explain it. It's kind of the way I learned it. When I was first starting out with, kind of understanding momentum indicators very early on in my career with trading traditional markets. And in this case, there are free versions. This is a nice fancy one. This is also indicating that, we went from, strong trend to weakening trend. And, if we see another uptrend form, this has got ADX and DMI. And you don't need all of this extra information. This is a paid indicator for this one here with this box. And then there's this one here, which is a free indicator. So I did get some questions about this. They're literally the same. One is paid because it's got a bunch of extra bells and whistles, and one is free. There's other free ones too that have momentum pivots. And this one is the BA PIG reverse Stoch panel, and the panel version just puts it in its own specific panel breakout for you here on TradingView. So you can just search that in the indicators tab up here, and it's free and available for you. You don't need a fancy one. I tend to keep them both on because I get a lot of questions about it. So I figured I'd answer that one. And you can see they're very close. In fact, they're almost the same. 92,697 and 92,698. So, it's one is a little bit more reactive live to price than the other, kind of going close by close, but it's not going to be anything too crazy. You can see that this is giving a projection of getting out of the bullish control zone on closes above 93, or bearish control zone even above oversold zone, I should say. Bearish control zone on this is going to be the 40 read. So the oversold zone getting out of here is basically 93,100, and we will see this close out. This also has a projection on it saying that, yeah, if it closes here higher, it's essentially going to turn both the K and the D read up. And the projection is showing that it won't be fully out of the oversold zone, but it will start working its way out on the next closure here or higher. And we can see that there's the overbought zone. This is going to significantly change. I actually got some questions about this. $124,000 would be entering the overbought zone up here. Is that possible? Absolutely. That would look like the next leg up, right? But that number is going to come down if Bitcoin does not change structure on the daily, essentially. So if it doesn't go into an uptrend, that number will significantly change. I mean, if it one-shotted its way up there, it's going to just, that number will change very quickly. So this is kind of like a close over close price projection, and we can always monitor that day by day. But honestly, I wouldn't, if the Stoke is not near that number, oversold or overbought, or near that zone, I don't think the number is relevant. So I wouldn't be paying attention to the one that's all the way up there in the overbought side of things, because that doesn't necessarily mean that Bitcoin's going to get there on this particular move, even if it does bounce and start to change structure. So it's a lot of other criteria that it needs to meet. Let's go ahead and take a look at the weekly and kind of talk about what we would like to see on this weekly. And by we, I mean me, and hopefully you, if you've been following along. And that is a closure above the upper first standard deviation of the Bollinger Bands. As I had mentioned, it closed above, but much like I had talked about, like when you get a close open and the bands pass price, wherever price is trading, or it passes the close open, you want to see it pretty quickly regained. And you want to see, if you're bullish on immediate price rises, you want to see it regain that fairly quickly, or at least oscillate around it. And that upper first is at 94,220 right now. It is oscillating live with price action, so it is going to change ever so slightly whether the candle's green or red, or playing in and around this upper first. But we want to see closes above there. So essentially 94,200 is where we want to see the Sunday close come in, somewhere above there. And then that gives us a volatility range of interest from the upper first to the upper second. Upper second, of course, is at 110, almost $111,000. And what's interesting about that, and I haven't pulled this fib in a while for you on the recordings, but if we just pull the local fib structure here, what you'll note is that that's not the one I was looking for, is it? There was $111,000. Which one is this fib on correctly? It might be a little bit behind. Oh, it's missing some of my fib numbers. I think it's missing my 2 spot. There we go. I knew that we had 111 to 112 because I have a zone that I've been talking about above price, above the highs, 108 to 110, 110 to 112, essentially, which would put us right around the 2 spot extension. That is where the upper second standard deviation of the Bollinger Bands is currently coming in. So almost $111,000 where the upper second is. And if price were to close above the upper first, that's likely going to be around 112, maybe even 114 to 15, which is going to be interesting because that will line up with some of the areas of interest that I've talked about above price as well for a while. So closing below the upper first, then the upper first becomes stronger overhead resistance. Obviously, it's just confluence with all of the other things that we've been talking about, and more likely that it will come back and try to reach for that basis band. Currently at 77,500. This is going to probably rise to around the $80,000 region. So again, we lose the red zone, at 88,700. We're looking, mid to low 80s as the likely target. And that would likely put it, if it didn't happen this week, then it would likely put it around where the basis band on the Bollinger Bands for the weekly is coming in. And again, it's still going to meet the criteria of breaking down on a daily closing basis and like all that kind of stuff for us to entertain those targets. Otherwise, there's not really anything too crazy to be worried about here for the bulls. I've been seeing a lot of I guess nonsense takes, in my opinion, or No, I don't even think they're uninformed. I think that they are informed and they are engagement farming takes, to be quite honest, about how like it's over. It's got to be engagement farming because nobody's that stupid, in my personal opinion. Um, and the reason why I say that, and maybe that might sound a little divisive to call people stupid, but we are on the internet after all. But there's some really dumb takes, and I just got to refer you back to this. This is high or low structure on the monthly. Bitcoin would literally to from here it would have to put in a high first, and it's still a higher high, and then it would have to take out the low at $49,000 and then get a lower high. That's how you change structure on the longer term time frames. All right. So anybody telling you now that it's all over and you should have sold and like that was the last run and things are gonna fall apart and like all this other, don't listen to them. And excuse my language, but they're fucking stupid. All right. Or if they're being serious, they're fucking stupid, or they're engagement farming, and that's just their way of doing it. You know, which is also fucking stupid. So don't pay attention to it. Understand what's happening on the charts. Understand structure, and it starts with trend, support, and trend first, and then support and resistance, which is based on trend, and then volatility and momentum. And we have the first three create the fourth, and you shouldn't put any more weight on one versus the other. You take them all in concert with each other and find the confluences to come up with your thesis for where things are going, and ignore the stupidity and stick to your plans. So that's the big thing. And if your plans aren't working, evaluate your plans to find a plan that is working, right? That's going to do it for me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Come back here on Friday after close. I will be evaluating where things are and where I'd like to see them again on the weekly as we come into the close. I'll give you my thoughts on where price is at that time. And then I will talk a little bit about some of the longer term timeframes, like like this monthly. We'll probably take a 2 month look at the 2 month and quarterly. I think something very important is being painted on the charts for the quarterly and 6 months. So yeah, I'm looking forward to sharing that with you. So with all of that said, Landy up. Take care.